When it comes to VC investments, we've heard about e-commerce, fintech, health tech, edtech, etc. But PropTech has been a recent phenomenon. Let's hear it from the investors in PropTech across the globe about their views on this sector. I would request Mr. Apul Nahata, mentor at Brigade, to moderate a very interesting panel on PropTech, a high growth and investable sector. Mr. Nahata, please take this forward.
Thank you, Manjusha. Welcome everyone. I'm Apul Nahata, mentor at Brigade, Asia's first PropTech accelerator, and I've had the privilege of working closely with over 50 startups catalyzing nearly the PropTech ecosystem. Over the last day or so, we've seen some very interesting speakers and sessions at the One World, One Reality Summit. From sustainability to ESG and green bonds, something new that I learned from how technology can be a catalyst for urban planning and development, and the emphasis on the emergence of PropTech, an area that is very dear to me, and I'm sure the panelists we have today, panelists who are investors who've been instrumental in driving PropTech investments globally. They're here to share with us as to why they believe PropTech is a high growth and investable sector. So without further ado, let me introduce our panelists now. Vipul Roongta is the Managing Director and CEO of HDFC Capital Advisors, the real estate private equity arm of HDFC Group. Vipul has a cumulative experience of more than 24 years in the real estate sector across mortgages, real estate investments, equity, credit and asset management, and has been with HDFC Group for more than 16 years. Vipul currently manages one of the largest residential financial platforms in India, focused on funding, development and technology businesses across the affordable and mid-income housing ecosystem. He has cumulatively managed and has been part of USD 3 billion of real estate investments across his various roles in HDFC. Glad to have you, Vipul, with us. Next, we have Jonathan Hannam. He's the co-founder and managing director of Taronga Group of Companies and managing partner of Taronga Ventures and the Real Tech Ventures Fund. Based in Australia, Jonathan has more than 25 years experience in the real estate sector, having held senior positions with listed entities, sovereign wealth funds, and insurance groups in major global markets including Australia, Sweden, Abu Dhabi, Singapore, and China. Glad to have you with us, Jonathan. Next, we have Faisal Butt. Faisal is the CEO, founder, and chairman of Pi Labs Limited. Faisal founded Pi Labs in 2015 after leading the first round of investments in PropTech startups Hubble and Trussell as individual investor. Faisal and his team have built a portfolio of 50 PropTech companies across UK and Europe, making Pi Labs one of the most active investors in the PropTech startups globally. We're very glad to have you as well, Faisal, with us. Last but not the least, we have Vaas Bhaskar. Vaas is the Vice President at Elevation Capital. He primarily focuses on PropTech and FinTech investments. He's on board of a few PropTech startups invested by Elevation Capital and leads the PropTech and FinTech investment at Elevation Capital. Glad to have you as well, Bhaskar. So, gentlemen, thanks again for joining, and let's get going. I, for one, am very keen to understand from our panelists as to why they believe PropTech is a high growth investable sector in the years to come. So very quickly, from the data that we have, PropTech globally saw a surge in investment from almost no investments about 2008 to about $1 billion in 2013, and from there on to almost about 18 billion, about an 18x jump in 2018. Faisal, let me start with you. What do you think were the triggers for these exponential investments in PropTech in those 5 years or so?
So I think there's multi-dimensional triggers here, and I'll talk you through some of them. So one of them was that you started to see in multiple developed markets big success stories emerging. So Airbnb in the years after the financial crisis emerged as a global multi-billion pound space as a service business. You know, at that time it wasn't classified as PropTech, but many of us would put them into the PropTech category. Mm-hmm. In the UK, you saw groups such as Zoopla as an online property listing platform emerge and list on the London Stock Exchange and achieve a multi-billion-pound valuation. In the US, you saw the likes of Zillow, et cetera, emerge. So I think it was the success stories in the early, and late noughties that were after the financial crisis. You also saw real estate groups that were starting to really pay attention and look to adopt PropTech technologies, and that has certainly accelerated in the last 2 to 3 years, where you have large real estate groups that have hired heads of innovation or heads of digital, and that has therefore triggered the adoption curve. And then with of course, with more and more customers ready to adopt, you have more and more founders that are entering the space, and very the traditional bricks and mortar sector. As real estate returns are being compressed, you have more and more parties, founders coming to the table as well.
Interesting thought. Jonathan, what do you think? You've seen this as well happening. What are your thoughts?
Yes, I think we would build on to Faisal's comments as well. So there's now market evidence to demonstrate that clean, green and connected buildings actually have a premium capital value, and they can deliver a premium market rent. And so we're coming to this very much from the point of view of a real estate owner or a real estate developer. And the developers have worked out that if they can actually have greater returns through these clean and green connected buildings, then they're actually going to invest into that space. So, my background's all real estate. So when I was at ADIA, Abu Dhabi, we were actually one of the world's leading investors in sustainable buildings.
Right.
Even when we didn't have the market evidence to support it, we felt that those would deliver a premium from a sort of capital value point of view. And it wasn't actually, there's a building just behind me in Sydney here, Darling Quarter, where we did a development with Lendlease. And that was the first building where we could actually show that tenants would pay a premium for an actually a sustainable building. And it was about a 20% premium, which more than covered the costs. So I think developers now have worked it out. And that's why there's this surge of activity. And, your numbers, 2018, it was 18 billion. It's actually quite big. It's actually much larger than that. In the last 2 years, we've seen special purpose acquisition companies coming out in the US. There's about 22 that are currently targeting the real estate and technology sectors. So the amount of capital that's in this space is well in excess of $20 billion already.
Yeah, I think good point about the SPAC. I think I remember there's one that just went from India. I think Renew Power very recently that went in. So I think you're right. SPAC is another way. I think the market's looking at valuing these companies much faster than the IPOs. Great point. Let me now turn tables towards India. Right? India saw massive growth in this sector as well in the same years, right? Going from almost nothing in about 2009 to about $200 million in 2014, and then scaling to over 550, close to 600 million in about 2019 and 2020. Vipul, what do you believe are the reasons that caused exponential interest in this space in India, given the hats you wear?
Apart from what Faisal mentioned and John saying, I think in India we are still maybe some time away in terms of saying that, okay, fine, just because a building is sustainable, we can actually give a super premium to it. However, I think adoption on technology is it's basically being driven by rather optimization of cost as of now. Because say, for example, the residential market, it's pretty much saturated at the top end. And the whole focus was that if I optimize my cost, that enhances my margin. So something very similar to what Faisal was alluding to. A second factor is that it also creates everybody's understood that it makes no sense just to keep looking at one of the many solutions. You need to have a common interface where I can get different stakeholders in the project on a same platform and drive efficiencies around it. And now efficiency may be in cost, it may be in time, it may simply be a better product at the same cost. And that is, we are seeing an unprecedented amount of adoption that is happening in technology, maybe because we're starting with a very low base.
Yeah, but I think there's a lot of room to grow if I was to summarize that, right? I think in terms of tech, and I think that leads me to Vaas. Vaas, you guys have been early investors in PropTech, if I can sort of say that in India. You came in to know, I mean, of course, Elevation Capital and its precursor, SAF Partners, right? So whether it was No Broker, whether it's PropTiger, or very recently Strata, could you share your thoughts on how you see this? What has been the reason why the growth happened?
No, sure. So if you see that first generation, right, a lot of that, what we've seen in India have been more consumer focused companies, right? And the reason for that is very apparent. You look at real estate experience in India, you look buying, selling, brokerage, shared living. It's like one of the least NPS sectors. There's barely anybody in the country who's going to come to you and say, I was delighted at this experience. So I think there was a lot of space for tech to come in and really create a delta in that experience. And I think there is still a lot of headroom there in pure play consumer plays, right? And these are very, very large markets. Like you're looking at brokerage pools in excess of 15 billion. You're looking at large parts of the GDP in construction. So it's large markets, just terrible experiences. And so the possibility in just in the consumer space is fairly large.
Okay,
right?
so you're
now,
saying sorry. Go ahead.
Sorry, go ahead, Apul.
No, please go ahead. Please.
So I was saying,
finish.
see the consumer trends going on. In addition, what Vipul started talking about is we're starting to see a little bit of those B2B solutions starting to come out. We are seeing early adoption on the top enterprises. People are making efforts at the SMB level to adopt some software there. So I think a lot of that will start to happen now. The other interesting thing is, as Jonathan and Faisal said, globally, there is this adoption happening. And I think as a country in India, we have very clearly established us as a place to make products for the world. I mean, you're seeing that with the more global companies that's being born out of India. So I see that also as a big opportunity set where there'll be a lot of SaaS companies building software from India for the world, building on the themes we just spoke about.
Good point. So that leads me to, let me now try and see if we can get a little more details on the startups, because I think we're talking about how startups are coming out of this. So Faisal, you've raised close to about 100 million pounds. I've invested in about 53 companies. They're valued over 400 million. You've seen 3 exits. So you sort of have seen this cycle, if I may use that word, right? So how many startups, have you seen for you to make these 50 plus investments? What are some of the common points you have seen amongst these startups?
Sure. We've now made around 60 investments, and we've now delivered 5 exits. So wow. We obviously having started off earlier than most VC investors in PropTech. We have earlier vintages where we've got the benefit of the hindsight and the history to have learned from our mistakes and have built the platform from the various insights we've picked up along the way. So, we see around 1,000 startups a year globally, and then out of which we invest in about 10 startups per year, right? And we've been pretty consistent on that cadence since 2015. So, 10 startups a year over 5-6 years has gotten us to the 60 startups. But you have to, just like in any venture asset class, you have to sift through a lot. That not everything is quality, etc. But a point Vaas made, which I think is really interesting, is that more and more so you're finding B2B SaaS startups. They could be based anywhere in the world and build a global product, and that. We think India is a particularly interesting market. We're very interested in seeing global startups emerge out of India, that through our investment, we can help them internationalize and globalize. To give you an example, in our portfolio, we have a startup out of Sofia, Bulgaria. They're called Office R&D. They've built the operational software for co-working spaces globally. So there's about 100 people working out of Bulgaria, but actually their clients are split about a third in North America, a third in Europe, a third in Asia, including customers in India as well. And if a startup in Bulgaria can do that, I don't see why a startup in Bangalore or Chennai wouldn't be able to do that as well. So I think that increasingly, PropTech, like other B2B SaaS categories, is global. And that's why, based out of London, we think quite globally about where the best ideas and the best teams might emerge.
I think very valid point. I mean, for the interest of the viewers would be on this, would be watching this. I have McKinsey data, right, that shows investment in PropTech far outshone other investments. I mean, it said something like, VC investment in construction tech outpaced the overall VC industry almost 15-fold through 2019. I'll share the link in the chat shortly. But I think to the point that I think you gentlemen are making, that I think it's a PropTech is a potent market. A lot of B2B play happening. Startups could be anywhere and are looking at targeting the greater global world and not just the geographies that they are probably just coming out of from. Jonathan, your fund is targeting to raise about $100 million, and I understand you invest in about 15 companies, from what I understand. Anything else to add in terms of what Faisal said? Any other thoughts there?
Yeah, I guess part of your question was also about how many we look at, and like Faisal, there's a lot of opportunities that we do get presented. In our model, we invest into slightly later stage investment, so we're looking for businesses that already have some level of traction. We have a small allocation to startups, but the majority of our capital is going to what we call scale-ups. So these are businesses that are potentially looking to go into a new market or looking to expand into a certain jurisdiction. So they might be coming out of the US into Asia, for example. We're seeing a lot of deals that way. And so the funnel is actually, it's pretty big. It means that you do a lot of work, a lot of due diligence. We recently had a growth program in Australia where we had more than 300 companies apply and only 10 get through. And so it's, it is that sort of, you do need to see a lot of investments to eventually then lead to an investment. And that's something that is pretty common across all VCs. I think the other part of, this is also about the capital that's now coming into this space. This week, we actually saw RMZ announce that the Canadian Pension Plan had made a big investment with them to develop new offices in Hyderabad and Chennai. You're getting these big sovereign wealth funds, and if you look closely at their press release, they're both talking about sustainable, and RMZ is already quite a technology advanced business in their own right. And I think for the developers have actually worked out that this is actually a part of their defense. They need to be able to demonstrate to global capital that they are interesting because they are at the forefront of this space. And so we've seen that with many of our investors. For Faisal and I, we both share some investors. So we both have Patrizia, a major German European investment manager. There's global capital that is now making big decisions in this space, and they're backing multiple partners. So it is a fascinating time.
Thank you. Thanks for sharing. Vipul, HDFC Capital is the largest investor in real estate projects in India, right? I mean, to the point that Jonathan was making about the market that's evolving, which is India, right? So you've been the largest investor in real estate in India with deployments, I think, over $1 billion over the past 2 years, just in the real estate side. You've also been an active investor in PropTech. So, you sit at you've got that dual advantage, right? So why from real estate to PropTech? Could you share some light there?
So just a few things. So first, largest, I would like to correct, say one of the largest, largest is probably a misleading thing in the hyper capital market like now. But large, I don't think the issue. I think the key is whether you're making money for your investors. And our entire I would not call it a pivot, but our entire focus on doing PropTech is that, you know, it's pretty much about driving efficiencies. Ultimately, we cannot, as financiers, only be looking at providing capital. Capital is just one of the things that is required. It's a practical problem. I was talking to one of the top developers. Jonathan talked about RMG and one of his peers in Bombay, and he said, listen, there are so many solutions that are being offered by a whole set of people. It is very difficult as a promoter of a real estate company to actually pick somebody to put into the ecosystem of development. And what if it does not do well? Because ultimately the liability is that of the developer. So there is a natural tendency, like in the banking system, there's a natural tendency to go for a safe, secure, big boy to take a particular service, which is an antithesis of the thing of, okay, fine, let's, if there's a new innovative solution, let's go and give them some business. And we felt that as HDFC, it is imperative that as one of the players in the market, apart from the fund, we obviously have the largest mortgage book as part of HDFC, our parent HDFC Limited. And we have relationships with almost 400 odd developers across the country. We said that if we cannot give credible solutions which are efficiency drivers for the ecosystem, then who else? And that with this process is what we started. The whole idea is not to do it like, say, a Faisal is doing, which is to do it like a PropTech fund, or a Jonathan is looking, where you go and invest in the company and make money. The idea is first to maybe even mentor on a non-financial basis some companies and introduce them to our ecosystem, which is our main play. We have almost $2.5 billion of assets on the residential side only in the fund. And the idea is that can we just drive some efficiencies in that? So that was one of the drivers. Second is, as we went down that journey, and a large part of it with Brigade Reap, we realized that actually there is merit in, as Vaas was talking about, in actually creating B2B ecosystems, because there are just not enough right ecosystems, and there is a tremendous resistance, if I may say, from the industry to adopt anything which is disturbing the status quo. And that is what we are doing. So we are working on about 4 or 5 solutions where we are now not becoming a super minority, but almost majority stake owner, and then drive it down the ecosystem and the panel of developers. That's pretty much what we are trying to do, and we are seeing some tremendous results in that.
Okay, I do have a question, but I'll come to that. But I think just the point that you made, Vipul, which was very relevant, I believe in it as well, right? See, compared to some of the other matured sectors that we've had, whether it's fintech, whether it's edtech, we've had those. Where do you think the PropTech startups, right, need to ramp up, or deliver better solutions, or solutions which are accepted better by the industry? I mean, and this is a question to anybody who wants to go first in it. How do you look at it from an investor, from an ecosystem player? Thoughts on that? Maybe Vaas, you want to go first? How do you see compared to the other mature sectors, and then maybe Faisal, if you could, if you've seen anything else similar in Europe, Jonathan, in Asia? Yeah.
No, happy to talk about this. So I think first it's a little bit of disservice to compare spaces. And I think especially PropTech is a fairly nuanced space, right? So in fact, you were asking a little bit on how many startups we see. It's a fairly broad funnel, but what ends up happening is, what we end up focusing a lot is, do these founders really have that depth of knowledge of the space? Because it's such a nuanced space, breaking into those first few customers requires those depth of knowledge that becomes extremely important. So that's one part of it. Now, when I think of it compared to other spaces, fintech, edtech, etc., that you spoke about. To me, I think two things feel very different. One is it's just such a low frequency use case, especially on the consumer side. And second, the cost of getting something wrong is extremely high, just given the ticket sizes, what can go wrong and things like that, right? Which is where I think the industry is very different, and hence you need founders who get it, who understand what works, what the nuances are, and figure out ways to really break in, understand the real pain point. Vipul was speaking about taking that integrated view across stakeholders. So actually doing a little bit of that, which is where I think you start to solve this problem of getting something wrong and say, I understand this, I'm building something for it to work, at least without failing in a big way the first time. And this frequency is something I think all of us will see a lot in PropTech, especially on the consumer side. And I think companies are taking interesting approaches and tools, content, different forms of way to build that frequency. But again, that's another nuance where I feel the industry is different and we need to think of it fairly differently.
I'm happy to add here.
Yeah, Faisal.
Yeah, so just to add to Vaas's comments, I think amongst many, there are two roadblocks to scale that I can point out here. One of them is product market fit. Oftentimes what the founders have built is not exactly a fit for the problem in the industry. And it takes some time for them to iterate their product until there actually is a fit and you're ready for scale. So the way we try to address that is we assign relevant mentors from the industry to guide the founders, because the founders, of course, you vet the founders, you due diligence them, and ultimately they're going to be a smart team, but there are going to be gaps, and that's just the nature of startups. So recently we brought on board a former Lend-Lease managing director, specifically to pay attention to our startups that are in the development and construction tech space, because oftentimes the founders are really smart technically, but don't commercially understand the problems in the industry. So assigning mentors and helping the companies achieve product market fit quickly so they're ready for scale is a key way to address this bottleneck. The other bottleneck that I'm sure many of you face is that the startups can secure maybe one or two customers, but how do you really go to market at scale? And the sales cycle for real estate, particularly at the enterprise level, is quite long. The sales process is quite nuanced. Sometimes there are like 10 steps to the sales process, and founders haven't been in a professional enterprise sales type of environment before. So they end up stumbling and not closing accounts that they should have. So we've now introduced an enterprise sales mentor and coach for our startups so that we can help them up their game and help them secure the large clients that they should be securing once the product market fit is achieved. But I think these are two of the big stumbling blocks. If we, VCs like me and Jonathan can address these, we can help our startups scale a lot faster.
Jonathan, anything that you would like to add here?
A great comment. So I think the challenge that we actually face is that implementation for the real estate sector, where we're dealing with multiple construction timetables, we're dealing with weather, we're dealing with tenants that need the space at a certain date, and the innovation team comes along and says, I think you should try this this new venture that is I think it's a really good one. It's going to change the way the building air conditioning functions. Well, that development manager is just going to say no, because there's so many pressures on them to deliver the project on time. So we do spend a lot of time working with the emerging technology companies to get them to actually to under-promise and over-deliver what they can produce. So they've got to manage expectations. They're in this world where they like to build up the business that they're in, possibly beyond where their business can actually deliver. And yet the construction level that they're coming into doesn't have any time to deal with failure. So, and that's in part why we sort of went up the curve a little bit to do slightly later stage deals, because it meant that we were taking out those levels of risk of the technology failing. And it's, there is, so many opportunities within the sector, but we do need to change the language from, even it's not difficult for a real estate company to put on Salesforce or to bring in a Microsoft product, but for them to make a decision on a new startup or an emerging tech company, it actually requires them to think quite differently, and we need to help them bridge the gap.
I mean, if I wear my accelerator hat, I think every point that you guys make resonated very, very well. I think, product market fit, thinking about the solution, thinking about the problem, not the solution, having a predictable and repeatable business, and then the revenue model. I think very key decisions. And I think, no, I think it kind of makes sense. It's good to see that it's not just a problem that we are grappling with here, but that's something that's happening, I think, around the world, because this is such a nuanced market. I think one of you used that word, which I think I liked really well. I think it's a very nuanced market. Many of the investors we went to, right, to help our startups, raise funds, made it very clear, given that startup was serving the needs of the real estate industry, which in India has had several setbacks. Right? The customer segment didn't make it comforting for investors to invest in that startup. Right? Vipul, I sort of wanted to hear your thoughts. I'm sure you'll have thoughts on this. We've had these conversations earlier, but love to hear your thoughts. And then Faisal, Jonathan, give us the view that you see in UK and Asia post Vipul's comments.
Sorry, in terms of investors not investing in the specific
startup, startups in the startup, right? Because they're saying you're working with real estate developers, not quite, and you sit at that interesting junction. So thought I'd open with you on that.
I am no expert. Maybe Vaas and Faisal can probably throw in a better view on that. But my understanding of this space, most of the startups are about the promoter and the ability of the promoter to adapt to whatever is the changing circumstance, either vis-a-vis their business or vis-a-vis whatever is coming their way from the market. And so it becomes less a call on the specific product and business plan and more a product on the team, and which kind of increases the human element while it also increases the it makes it pretty much interesting as far as I'm concerned. But that is one of the reasons why a lot of people shy away. But one thing which I think is given, especially in the Indian startup ecosystem, with some 75,000 startups in India. If you are a relatively smart person with a decent head on the shoulders and the ability to speak well, in my opinion, getting a angel funding in a hyper angel setup like India nowadays is not exactly the biggest of challenges. The challenge is, can I actually scale up my business? Can I get people to pay for whatever service and product that I'm making? And that, I think, is a significantly bigger challenge. That is why we see a lot of people doing what we call bullet gun or bullet machine kind of a spray investment at different levels. Not only at angel level, even at pre-series A level, even at VC level, which kind of is an antithesis to the entire thing of mentoring and, having a diligence attached to the things and taking them together up. So the time is there. There is enough that is being happening in the market. But we personally believe, I personally believe that it is imperative that you choose the segment, focus on the promoter, but the business plan and the scaling up, most importantly, is this something that can actually get you paying customers? That is the criteria as far as we are concerned.
I'm happy to jump in after Vipul, and then I have to drop off.
Sure.
So, we've seen the UK and European ecosystem evolve. So there was a stage 10 years ago in our ecosystem where there were late stage funders around, and some of the you could say less risky capital was there. You had Series A, Series B investors, but you didn't have pre-seed and seed. So it was very hard to build the supply of startups into the ecosystem for the Series A investors to invest into. So I think, part of Pi Labs' role in the European ecosystem and increasingly global ecosystem is to provide that earlier stage capital and be able to come in and vet and due diligence and invest in startups prior to them having the Series A metrics of 1 million annual ARR. Because there's lots of investors who can invest at that stage because you've kind of de-risked it. So there's an ecosystem question. India is probably not there in terms of the supply of the early stage capital, which is critical to build the ecosystem for other investors like Jonathan's fund to go ahead and invest into. And the other part is what Vipul is referring to, which is the capital raising capability of the actual founding team. Now that's something that not all founders have. Founders might be great technically, they might be good at product, but they don't know how to communicate the equity story and the narrative and the vision around how big the opportunity is. And it's that ability to sell the vision that a lot of startups don't have and the founders don't have. And that once again comes back to a skill that can be built through training and mentoring, which is something that we try to address through that way. But it is something that takes time, it takes training, it takes a lot of mentoring. I do have to drop off, guys. I'd love to catch up with you guys separately, so look forward to touching base. Thank you so much.
Thank you, Faisal. So yeah, thanks, Faisal. So Vaas, maybe I think, sorry, Jonathan, you want to give your thoughts on this, because I think I like what Vipul said. I think I also want to sort of get Vaas to throw in his thoughts in terms of being in the Indian market and looking at PropTech startups coming in. So.
Yeah, I mean, our perspective on this is that we don't want any failures within our portfolio, because we're dealing with a real estate sector that itself cannot deal with failure. So it means that we're a more patient investor. We're actually quite slow in our, we really like to get to know a company and to see that it's getting traction. We actually help them to get their traction. We can help with introductions to new customers. We do the mentoring as Faisal does. But our investment might take a little bit of time. We might put a little bit of money in, but then we'll actually manage our investment in line with what they're promising us that they'll deliver. So we'll actually put that in our terms, and it means that we're holding them to account. But if they do deliver, then they receive additional funding. So it's only what they've told us that they'll do. So we think that model is actually quite a good way to address the customer setbacks that you talked about. If investors are putting money into businesses and they fall over, that doesn't help anybody. What we need is to actually create an ecosystem that is supporting these emerging companies. And it is actually very stressful for many of these groups when they're raising capital, they're chasing new customers, they're going into new markets. It's incredibly stressful. As a gentle aside, so in our growth program, we actually put heart monitors on each of the founders, and we track their health and we track their sleep, because for us, the founders are actually very critical. And if they're not sleeping well, and if their stress levels are so high, there's no way that they can deliver the product that they're telling us that they can deliver. And it's a really interesting, it twists it around a bit, because we care about those founders. We want them to succeed, and we also want them to be healthy and to occasionally sleep. Yeah, so that's what we need to make the ecosystem support. And then more investors will bring money into this space because they'll see those returns coming through.
But Vaas, and I mean, let me just add, thanks, Jonathan. I think it's, from stress, inducing to monitoring stress, very interesting, right? A lot of places, stress is induced on founders. So it's a very interesting thing, something that I'd love to know more about, maybe at a later stage. So,
yeah, it's something we do with KPMG. It's a really great program, but it actually, the founder is so critical to the success of the business. And so they've got to be thinking about their health at the same time.
Definitely. I mean, I think interesting thought, and I think good way of bringing that in. But see, I think that's again de-risking at a later stage investment, right, Vaas? And I think you guys have done that too. But any thoughts on, see, my biggest thing is, and having worked with now over 50 plus startups, one of the things I see early stage, right? See, if somebody is betting on you and you've demonstrated some traction and some scalable model, then the capital for you to raise at the next level is relatively easier, right? But there's this contradiction that a smart entrepreneur can raise that initial capital very quickly too, which we have seen. It's the in between, which is getting from that, fools and families, what I call it, to a point where you can make a scalable model, the in between. How are you guys seeing this space evolve? I mean, is that, are investors opening up in that area for PropTech startups? Vaas?
Right. So Apul, I think you rightly said, this is a space in India which is fairly legacy, very fragmented, very unorganized. So the challenges are a lot more, right, compared to, let's say, more completely green sectors. You go and build something from scratch. So it's very true, but the opportunity size is also so large. So, I mean, it would be foolish of almost any VC operating in India to say, this is a space I will not invest in, right? And which is why, as a fund also, we've been very active in this space and made a few investments, which you just spoke about. So that's one, just as an opportunity side. Having said that, I think Jonathan also alluded to it. It requires patience. It takes time to really build something out. Iterations are slower because it's not one of those consumer products you put out and you get data the next day and you figure out what's working, what's not, right? So it requires patience and it requires you for the long haul. Absolutely. That's one. Second, I think when I think about early stage, one, there's enough capital now starting to come in India at a very early stage. When I think about seed stage investments, I see the Indian ecosystem being very strong. There are accelerators like yourselves who are helping people get off the ground and provide that deep mentorship. There is overseas capital also starting to very actively start participating in early stage investments. And the interesting thing that's happening is the size of these rounds are becoming decently substantial, right? So there is enough capital for you to make some mistakes, try out a few things, be a little bit bolder than you would be if the amount of capital you had was more limited. So I think that's becoming more apparent. Second, I'm seeing for the scale up journey, right? And the way I think about it is, I feel startups sometimes falter on two fronts. I think one is, especially in India, right? I've seen there's a little bit of tendency to throw more bodies at the problem rather than take a more tech product driven approach sometimes, right? And that takes you so far, but then you hit a ceiling very soon. So that sort of help and hand holding along the way to see, are you really taking that tech product driven approach, which is scalable, is something I think we very strongly invest with our teams on and say, is this something that you're doing very actively from day zero? The other nuance I think about India is, I feel sometimes you need to get a little bit more full stack. And it's a little bit of dichotomy to the first statement I made. You need to be tech driven, but you do need sometimes a deeper services layer. You need to get into things you don't want to get into, like maybe you have to do logistics, maybe you have to do financing, maybe you have to do other things. But that's when you get to the true heart of the problem and solve it for the stakeholder you're solving for. So I think those are two parts of that middle where you get stuck, and hopefully enough capital gets people through that.
Yeah, I mean, I'm very hopeful of it. I think I've started seeing those trends of capital flowing in. And I think the part that you made about creating a solution and not just a product, because product is given and somebody else has to install or use it. But in India, we've seen that if you have a solution which is a little more wider spread, which takes it from A to Z, then the propensity for the customer is more willing to sort of come in and pay you. That's right. Fair enough. I know we've got about a few more minutes. So we're launching our angel fund shortly, and we saw an interesting parallel between fintech and PropTech. Fintech, give or take where you are in the world, took about 10 to 15 years to mature. We are now seeing that the timeline for PropTech to get mature is sort of getting crunched, right? Jonathan, are you seeing similar trends in the broader Asia, Australia region? Is that something that you resonate with as well?
Yes, absolutely. I think the probably the COVID period has accelerated the digitalization of real estate. And so anything that is actually allowing for owners of real estate to have a greater understanding of what's happening in their buildings, that gives them greater control over their construction processes and can actually lead to additional sources of revenue, especially for the biggest challenges have been the hotel sector has been very much impacted. The retail sector has moved largely to online. And for the commercial office sector, we've seen a lot of people working from home. So the resi market's actually done pretty well in certain markets as well because of that. So, as we move out of COVID, many groups are realizing that the only way to win back additional revenue is through the use of technology. And that means that there's an acceleration of real estate tech. It's just happening, and we're seeing it in the amount of capital flows, but we're also seeing it in the emergence of really interesting opportunities that are targeting this space.
You're seeing that. Vaas, since you lead fintech and PropTech at Elevation, what are your thoughts? What do you think? Is that
No, 100% aligned. I think COVID's definitely been a good shot in the arm, and I see this as not just a short-term thing, right? I see this as something which will play out for a few years to come, and once you get into that curve, it's very easy to drive adoption from there. Second, I think if you think about fintech in India, right? I mean, for whatever you say, I think there's been maybe 2-3 big levers why it's all moved fast, right? One is there's been a policy push with the infra layer coming into place. There's been great teams getting into the space, and there's been capital going in. And today I think of PropTech, I see the exact same 3 things happening, right? I mean, there is the policy push that's happening very strongly from the government, and Vipul can speak a little bit more on that. I'm sure he's in the thick of things there. And there is capital coming into the space. We've spoken about it, and I'm seeing phenomenal teams go into the space. So no reason why they shouldn't be faster.
Yeah. No, I think RERA, demonetization, GST, I think were the 3 big tsunamis that hit, and I saw a lot of realignment happening. Vipul, with your thoughts on that, along with, so one is the market evolving. Are you seeing, because of, again, the dual advantage of having customers of the PropTech startups working with you, are you seeing resistance for the customers to adopt startups? Are you seeing a change in mindset, a general shift, apart from the policy changes that Vaas was talking about?
I believe there is naturally a resistance to change. Anywhere when you want to change status quo, it probably applies to everybody on the panel also. There is generally always a resistance depending on your comfort zones. More so it applies to the real estate industry and real estate promoters. But one change that we are seeing now is that they all realize that it is required. Now the issue is, can I get a credible person to give me a solution where it does not come back onto me in case it fails? You talked about the cost of going wrong. That cost of going wrong in the Indian real estate ecosystem is still very, very high, and it is not on the person who is going wrong. It is on the developer in the real estate case, irrespective of which service provider is not doing something right. So that is obviously a big constraint that everybody faces, but we are seeing some clear changes. A. B, I think it is being led with a change in thought process and behavior by the top developers. Like for example, billions of dollars have come in PropTech in India. Almost 72% of the money has come in sales technology. Vaas also talked about some $15 million revenue on the brokerage pool and so on and so forth. But so there is this massive market that everybody is looking at is, can I somehow create a B2C for the sales part of a real estate play? clearly adoption of technology has happened at a rapid pace there in different segments of it, whether it's discovery, whether it's a transaction, whether it's a platform, and so on and so forth. And now more and more people are just not having an option but to just adopt it. So that kind of a thing will happen in construction tech. It will definitely happen in stuff related to sustainability. We are seeing this in water. We are seeing this in power. Not that much on the waste management side, but will happen. So it's only a function of having 2 or 3 success stories that everybody will start following in those respective micro markets, and that we are seeing that in a big way coming.
Maybe I can add, Apul. I think it's so critical that market leaders like HDFC take that first move as well. We've had a great experience. When I was at ADIA, we were investors with HDFC in your property funds. You need those market leaders to take that step, and we are seeing that across the globe. The businesses that are making those investments and the first mover, they're actually getting rewarded because they're getting a financial outcome, and they're also more attractive to global capital. And that's, at the end of the day, that's what makes the boards and the CEOs of our businesses stand up. If global capital is demanding sustainability and technology leadership, then of course the developers will act.
One big thing, Apul, just as this thing, which is actually a driving principle for us, the inefficiencies in this entire ecosystem comes because everything, there are more than 3 people involved. There's a whole chain. Everything, there is a chain, whether it's your purchase, whether it's your supply, whether it's your demand related stuff, construction. And what technology is doing in a very simple way, it is just eliminating the chain. And it is, you can call it B2B, you can call it B2C, B2B2C, and B2B2C2C, or something of that sort. But the bottom line is that lesser the number of people involved in the delivery from the production to the consumption, the more the efficiencies. And it is gonna happen in a very big way now on the fintech side. Vaas touched upon it. Maybe Pras, I'll call you separately to get your understanding on this. But it is a serious issue, because you are lending to developers, but the flow of funds to the second rung, that is the vendors to the developers, is as abysmal as it can be.
True, very true. So Jonathan, on the point of that you made about HDFC, so we've been fortunate to have Vipul as a part of a jury at Brigade REIT. So I'm privy to some of the discussions I've had with him, and HDFC Capital has been evangelizing usage of PropTech, has been massively helpful in identifying startups and that. So I think we've got a great one of the top market leaders working in the Indian ecosystem in terms of batting both for the startups, of course, for the PropTech ecosystem, and of course for the developers. So I just want to sort of make that point. I'm sure you had that experience earlier in terms of the investment that you've done, but that I believe is extremely important. Any evolved market or ecosystem that I see, unless you've got a couple of strong evangelists right at the top pushing that down, it's very difficult for the rest of them to sort of adopt. And I think we're starting to see some of that momentum happening. I see Vaas, you're sort of nodding, hopefully in agreement to some of what I'm sharing there. One, I think we're almost towards the end. I'm getting notified by the team. I know Faisal. So Faisal, they started a fund, and then they started an accelerator at Pi Labs. At REIT, we started an accelerator and now looking to set up fund, right? From the 3 of you, given the ecosystem that you come from, what role do you believe entities like maybe an accelerator or a fund can play in pushing PropTech adoption and the emergence of PropTech in general?
Maybe I can start with that one. So what we see very clearly is, so we bring in a number of corporates as corporate partners for our accelerator or our scale-up program. And in many cases, we're starting them on the journey into real estate technology. And so the accelerator gives them a very safe way to meet a number of companies, to experience some of those businesses and actually have them coming into their portfolios. But what we've seen is that very quickly, those corporates realize that there's a financial gain, because when that emerging technology company comes into their business and starts to do very well, that value is actually being created by the corporate. So we're very fortunate. So some of our founding partners in our growth program then became investors in our fund. So I think that's a very good model for you to follow, because this is a journey for many corporates, and the journey takes time. And as that journey is underway, you need to celebrate the wins, because we don't talk enough, I think, about the successes in this space. But the accelerator program is a very nice way to bring the corporates on that journey.
And also, I think, I think what you guys are doing at REAP, because it's more of a mutual admiration setup. So let me do my part. Brigade REAP, I think, is doing a very good job on a serious note. But the biggest role it is playing is that it is providing that credibility layer. I think that is the crux. If I, as a user, say that an accelerator or a fund is supporting a particular thing, it adds a layer of credibility which that individual promoter can probably never get. And that, I think, is the single biggest factor that comes into scheme of things. And you talked about HDFC, but let me tell you, we are guilty, as probably a lot of other people, that there is more talk that is happening in the space, and we are right at the forefront of that talk. And it's really the time that we need to walk that talk in terms of doing a lot of things that as an institution we need to, and that's what the focus is on.
Oh, and Apul, you spoke a little bit about fintech, a couple of other spaces. I think a lot of that got led by early stage accelerators, people like yourself, giving the time and sort of making those connections to make that happen. So I think if we have to see that happen in PropTech, I feel REAP will play a big role, and a bunch of people coming together is what kind of really gets these things in motion. So
REAP is just one of the. There are quite a few people trying to play in this space now. So of course we'll continue to play our role, and I think each of us is important for the ecosystem to sort of evolve. I think I'm now getting hammered that I need to shut. So any final thoughts before we close the panel? 30 seconds.
I would encourage you to continue. I think you're doing, as Vipul has said, it's great to have accelerators, and I think the seed fund will be a really interesting addition for your offering. It will lead to credibility as well, because when you have financial funds at stake, you actually make better decisions.
Thank you.
Yeah, absolutely. And I think that's the name of the game. As I said, key is getting that fund in place. Apul, once you have the money, you'll realize it's a totally different ball game also, because and much more interesting, as Jonathan said.
Okay. All right. Vaas?
No, I think it's a global game, and I think the more I think about it, India is just in a very special place, where I think the ecosystem in India, whether it's accelerators, founders, capital, everything has evolved to really play this game and being at the forefront of it. So I think it's a wonderful place to be overall.
Right. So thank you to each of you, our panelists, for joining us today. I think the writing on the wall is very clear. Real estate globally will recover on the back of tech innovation. Prop tech companies would have to find the balance between long-term opportunity that the post-pandemic era opens up, and the immediate revenue or monetization strategies that they need to build. Our panelists share that there is capital available for PropTech companies solving real problems for the real estate fraternity with immense scope to grow exponentially. PropTech indeed is a high growth sector with massive opportunities for startups, investors, and the overall ecosystem to benefit in the times to come. Thank you once again, gentlemen, for taking the time out and being here. Really appreciate your thoughts and thanks for being candid and sharing them.
Thank you, Mr. Nahata. PropTech does sound like a very promising sector to invest in as per our panel.